Right now, we're living through a moment that happens once in a generation. The crypto market is entering a new phase of rapid growth. Bitcoin is breaking its all-time highs, major funds are pouring into crypto, and the S&P 500 has just reached new records. This is the exact period when people with small starting capital can achieve results that used to be reserved only for a select few. The reality is this: 99% of people will miss this moment, just like they missed Bitcoin at $3,000, Ethereum at $90, and Solana at $2. Not because it was too late, but because they didn't understand how to take advantage of it. If you're here right now, you're already in the top 1%, the people who want to learn and take action. In the next few minutes, I'll show you everything you need to start trading confidently: how to register on an exchange, how to fund your account, how to open your first trade, and how leverage, orders, and risk management actually work. You'll truly understand how traders make money in crypto and how you can start earning as well. So watch this video until the end. The knowledge you gain here may be worth a lot to you in the future in the best possible way. First, we go to the official Bybit website. I recommend doing it using the link in the description. This way you won't accidentally end up on a fake site, and your money will stay safe. A registration window will immediately open in front of you. Here you can also see the additional bonuses that you will receive if you register as a referral. In this field, you need to enter the email address you normally use. It's important to enter the correct email because after registration you will need to confirm it. In the next field, you need to create a password that you want to use on the platform. Make sure it meets all security requirements. Next, you need to check the box confirming that you accept the platform's terms. Here you will also see a field for a referral code. If you sign up with one, you may receive bonuses from the platform, potentially up to $1,000. After that, you can click Create Account. There is also an option to register in one click using Google, Apple, or Telegram accounts. But in this tutorial, I'll show the example using email registration. After that, we click Create Account and pass a CAPTCHA, which confirms that we're not a robot. Then the platform will ask you to confirm your email address. You need to open the inbox of the email you entered, copy the 6-digit code, and paste it into the platform. Once you enter the confirmation code, you will be redirected to your profile page. Here you can complete verification of your account. To do that, click the verification button. After you click Get Verified Now, the verification menu will open. You must confirm your country of residence, because depending on which country is linked to your account, the list of available deposit methods, available instruments, and other important features will differ. So indicate the country where you are actually a tax resident and where you live. After that, you need to agree to the processing rules for the personal data you upload, and then click Confirm. Next, the menu for uploading documents will open. Depending on your country, different document types may be supported. In this case, available options include a residency certificate, a passport, an ID card, or a driver's license. You can choose, for example, a passport and click Continue. Once your documents are ready, click the button I'm ready for verification. A QR code will appear, which will redirect you to the verification process on your phone. You will need to take clear photos of the front and back of your document, as well as complete facial verification. Within a few hours, your account will be activated, and you will be able to use the full functionality of the Bybit platform. After registration, you are taken to your personal dashboard. On the left side, in the menu, you'll see the main sections. In the Buy Crypto tab, you'll find all the ways to fund your account. We'll cover them in one of the upcoming sections. Next, in the Markets tab, you can view the current market overview. There are many widgets for different currencies. You can see the top gainers and top losers of the day, view current trends, check the overall market situation, and use different metrics and data for analysis. It's a very useful section for anyone who actively trades or speculates on the market. Next, if you go to the Trade section, you'll find more practical tools. For example, there is the spot trading interface, where you can simply buy cryptocurrencies and hold them. You can also make the same simple purchase but with leverage up to 10x from the exchange. There's also the ability to trade futures contracts, where you can open positions with higher leverage and more detailed contract settings. This is better suited for speculative trading, allowing you to achieve larger results than on spot. You will also find crypto options here, which are built on the same principles as exchange-traded options. These are also derivative contracts, similar to futures, just with the mechanics specific to options. Next, in the Tools tab, you'll find copy trading, which lets you automatically mirror trades from other traders into your own account. This is very convenient for beginners who don't yet know how to trade independently. There are also Trade GPT and trading bots, which help you open trades automatically using artificial intelligence or predefined algorithms. Additionally, there are many more tools here, including demo trading, which lets you practice strategies with virtual money without risking your real funds. In the Finance tab, you'll find programs designed for earning fixed income on your funds. Among the main ones are staking and the ability to order a Bybit card so you can use it for your purchases. If you explore all the available services on Bybit, you'll see there's a lot of useful functionality. The rest of the menu is located in your personal account profile. To view the cryptocurrencies you currently have in your wallet, go to the Assets section. Here you'll find your main wallet from which you can transfer funds to your trading account. And once your funds are in the trading account, you can go to the terminal and start opening trades. Before starting trading, we need to top up our Bybit account. There are 3 common ways to do this, so let's look at each of them in detail. The first method is depositing through a bank card. You need to go to the one-click buy menu. Next, you need to select the currency with which you want to top up and the currency you want to receive. Then, at the bottom, you can choose a payment method. There is an option to top up via Apple Pay. This is especially convenient if you're using the app. You can literally top up your balance with one click. You can also choose to deposit via a bank card. You need to select the bank card option and specify the deposit amount. The platform will immediately calculate how much USDT you will receive in your account, and then you need to go to the card adding menu. If you haven't topped up via card before, here you will see a list of banks through which you can fund your account. You will need to enter your name, card details, and email. After filling in all the information, you need to agree to the terms of transaction processing and data storage and then click Continue. After that, all that remains is to confirm the payment in your banking app, and the money will arrive in your Bybit account within a couple of minutes. Now let's look at how to top up your account through the P2P service. These are payments from one user to another. You can send money to one of the platform's users through any payment system convenient for you, and they will transfer the funds to your account. You need to select the preferred account currency, enter the amount you want to receive, and choose the payment method you need, for example, a bank card. Merchants who can complete this transaction will appear here. Pay attention to the success rate and also the number of completed orders. The average operation time is also displayed here. After choosing the merchant you need, you should go to the Buy USDT menu and specify how much you want to deposit. The platform will automatically recalculate how much you will receive on your Bybit account. Here you choose the payment method convenient for you and click Buy. After opening the order, you will need to transfer the money to the merchant using the details provided. Always double-check the accuracy of the information. Then they will send USDT to you in return. After receiving the funds in your account, you will need to confirm that the order has been completed. If you encounter any difficulties, you can contact Bybit support, and if you come across an unscrupulous merchant, support will also assist you. And the most convenient method of topping up your Bybit account is a crypto deposit from another crypto wallet. To make a crypto deposit, you need to go to the Buy Crypto menu and then select Crypto Deposit. After this, choose the coin you want to deposit, in our case, USDT. If we are depositing Tether, we need to choose the network through which we want to top up the account. The most popular network is Tron, TRC20, and the BP20 and Ethereum networks are also often used. To make the payment, copy the wallet address shown here, then transfer the required amount to this address, and it will appear in your account afterward. You need to go to the wallet where you have USDT, click the Withdraw button, and fill in the address and network fields, then click Send. Within a few minutes, the money will appear in your Bybit balance. After a few minutes, the page refreshed. The deposit was added to the main list, and it shows that I transferred 500 USDT from one wallet to my Bybit wallet. And now, if we go to the Assets menu, we will see that 500 units appeared in our account. This is how easily we funded our Bybit account from another wallet. Let's move to the trading terminal. The first thing we see is the chart window, showing the current price and how it has changed recently. We can adjust the chart's time frame and view the same price from different perspectives. As in any terminal, there are additional tools, technical indicators, drawing tools, and different chart display options. In short, a full set of standard features. To the right, you'll find the order book, a list of current orders. Sell orders are at the top, buy orders at the bottom. The market price is formed between them, and recent trades show the levels at which they were executed. Further to the right is the trade management panel. Here we can place a limit order at a specific price, a market order at the current market price, a conditional order triggered by a specific price, or other advanced order types. At the top, we can select the margin type, cross margin or isolated margin. We'll talk later about the difference between the two. Here you can also preset take profit and stop loss levels and choose whether the position is long or short. Below, you can see the history of your open orders and active positions. For each position, you will see entry price, liquidation price, break-even price, take profit and stop loss, current profit or loss. Your balance and margin usage are displayed in the bottom right corner. Overall, these are the key terminal elements you need for trading. Now, in demo mode, let's walk through a specific trade, understand the different types of orders, and figure out how to correctly place a trade and how to set up all parameters for each position. Let's begin by clarifying the order types. We'll go over each one in detail. A limit order allows us to open a trade at a price better than the current market price. For example, if we want to open a long position, we can place a limit order at 82,000 while the current market price is 84,550. If the price reaches this level, a long order will automatically open. And vice versa, if we want to open a short, we can place a sell order, and if the price reaches that level, the trade will automatically open downward. If the price doesn't reach your order, it remains unfilled. You can also set how long the order stays active, for example, for 1 day, or keep it active until cancelled. But if the price never reaches it, the order simply won't be executed. A market order is much simpler than a limit order. A market order is executed at the current market price. You simply set the trade size any amount you want, choose long or short, and it will be executed immediately at the price available on the market right now. A conditional order allows for more complex combinations. For example, when a certain price level is reached, a limit order will be placed. This is a more advanced format. Let's say we believe that if the chart breaks below a certain low, the downtrend will continue. We can set a trigger. If the chart drops below 82,100 and continues down, then an order will be placed at a different price in the direction we expect. These are more complex instruments, and I recommend focusing primarily on limit and market orders. At the top of the interface, we can also talk about margin types. When you open a trade with leverage, you take on more risk but can also earn more. For example, if you open a $50 trade with 10x leverage, your profit and loss behave as if you opened a $500 trade, not a $50 one. If we choose a different leverage, for example 100x, then instead of $50, your effective position will be 100 times larger. This tool helps traders earn more, but remember that you also take on greater risk. To manage risk in your portfolio, you can choose which margin type is used for each trade. If you use cross margin, then your entire balance across all positions acts as collateral for this trade. If the trade moves too far against you, the liquidation price will be calculated based on your whole portfolio. If you use isolated margin, you risk only the exact amount you assign to this order. Isolated margin works like a built-in stop. You cannot lose more than the amount you set. It's important to follow your risk management rules. Risk and money management are extremely important in trading. Cross margin allows you to hold positions longer even when they're in drawdown and potentially bring them back to profit if the price reverses. Isolated margin, on the other hand, automatically limits your maximum loss. By the way, speaking of risk management rules, we should also mention additional orders such as take profit and stop loss. These are auxiliary orders that automatically close your trade either at the profit you set or at a small loss, if you want to limit your maximum drawdown. Now let's break down a trade using a concrete example. We have the option to open a long position. With a long, you earn more as the chart goes up. If the price rises by 10 points, you make one amount of profit. If it rises by 100 points, you make 10 times more. That's why in futures trading the distance the chart travels is so important. In a long position, you earn when the price increases, the more it grows, the more you make, and you lose money when the price falls. A short order works inversely. Here you can profit from a price decline. If you expect the chart to continue falling in a downtrend, then the more the price drops, the more you earn. And conversely, the more the price rises against your position, the more you lose. Now let's set up a full order step by step. For example, we want to use cross margin, meaning the entire balance will support this position. We choose minimal leverage 10x and set the trade size to $50. We decide to open a short position, meaning we want to profit from a price drop. Our target is the level of $82,000. If the chart reaches this level, the trade will automatically close with profit. Notice that the platform calculates the projected ROI automatically. If our trade plays out, we will earn 31% on this position. We can also set a stop loss to limit our losses, for example at $86,000. In this case, our risk-to-reward ratio is 1:2. If the stop loss is triggered, we lose only about 15% of the position. If the take profit is hit, we earn around 32%. The stop loss limits losses if our forecast is wrong and the chart starts rising instead of falling. We lose only the small, predefined amount we set. To place the short order, we click short. The platform may ask for a higher minimum trade size. If the amount doesn't meet the requirement, then we adjust it. We confirm the order, and the position appears in the open positions list. We can now track its current result, profit or loss. If the position is in profit, it's highlighted in green. If it's in loss, it's highlighted in red. You can monitor the live state of the trade, adjust the stop loss, and make other changes to the position. Now let's talk more specifically about the strategies you can use when trading futures. There are several of the most common strategies that you can apply in your trading. The first and most well-known one is scalping. You can select instruments and timing in a way that allows you to open many short trades, sometimes even lasting just a couple of minutes, and frequently lock in profit. This strategy works well for traders who can dedicate a lot of time to analysis and active trading. To use it, you need to switch to short time frames, 1 minute or 5 minutes, so you can see the chart in a close-up view and add the indicators you need. The platform offers many different technical indicators that you can use to look for short-term trades. If you want to learn even more about trading strategies, check out our channel. There's a lot of useful information there. The second strategy is swing trading, a more long-term strategy that can keep you in a position for several hours or even days. Remember that when using cryptocurrencies and futures, you also pay for the margin you're using. However, long-term trades can bring significantly larger profits. For example, if you see a long-term downward movement, you can open short positions along the trend. And if you see a short or mid-term upward trend, you can open long positions and hold them for a long time, continuously earning profit as long as the trend remains valid. For trend-based strategies, it's best to use specific trend indicators, moving averages, parabolic SAR, and many others that can show whether a trend is present and whether it can be used. Another popular strategy is hedging. When you own an asset, you can open a trade in the opposite direction or reinforce that position. Futures allow you to adjust the risk of your overall portfolio. For example, if you think Ethereum might drop, you can open a futures position in the opposite direction. Even if the coin does fall, you will lose only on the spot wallet, but you will earn on the futures trade, helping compensate for portfolio losses. This is a convenient way to ensure your positions. Trying out trading is easier than it seems. Start without leverage or with very small leverage, 2-3x, to feel the market safely and avoid blowing your deposit in the first few minutes. But the most important thing is understanding how to trade correctly. That's why I recommend checking out our educational videos. There we break down risk management, show real entry examples, and explain the logic behind decision making. This is a calculator for futures trading. You can open it anytime. It's a tool that helps you plan or calculate how your order would have performed if you had used it in specific trades. For example, let's calculate what result you would get if you entered a position at 80,000 and closed it at 120,000. And let's say it was a long position. Here you can switch between long and short, specify the leverage you would use, and set the position size in dollars. You can adjust various parameters, change the leverage, and see the exact result you would get depending on the trade. There are also additional features for calculating target price levels. In this case, you indicate the leverage, entry price, trade size, and the ROI you want to achieve on the trade. Based on that, the calculator gives you the target price. Once you have this target, you can use it to set your take profit in your order and achieve the desired results. There's also an option to calculate entry points separately for long and for short positions. This tool helps you set the correct limit order and get the exact result you want. Let's quickly go over a few more points about security and saving money. First, pay attention to fees. Bybit charges different fees for market and limit orders. As of today, a regular market order costs around 0.6%, while a limit order costs 6 times less, about 0.1%. To save money, whenever possible, place trades using limit orders. They give you a discount. It may seem like a small saving, but overall it significantly reduces your monthly expenses, especially if you open many trades. The next point concerns funding fees. They can be either positive or negative. For example, if your long positions currently have positive funding, you will need to pay some amount for holding that position over time. At the same time, you might have a short position with negative funding. In this case, if your strategy allows, it's better to open trades that fall under negative funding, and you effectively earn extra on such positions instead of paying for margin usage. There are also so-called OCO orders, which stands for one cancels the other. These orders help you plan more efficiently. You set both orders, and when one order is triggered, the other is automatically cancelled. This is convenient for managing your positions. Now regarding account security. Make sure to enable two-factor authentication. Use all available platform features to strengthen your security. The more protection you enable, the safer and more comfortable it will be for you. One more note: some countries, such as the USA, China, the UK, France, and many others, restrict access. Always check in advance whether cryptocurrency trading is allowed in your region. Violating regulations may result in account suspension, so be careful. Let's return to our trading terminal and discuss how to close trades properly. As I mentioned, you can check the result of an open trade in the unrealized P&L column. Here you see the current outcome of the trade, which is also displayed in this small window. To close a trade with profit or loss in one click, press the cross button. A warning will appear, confirming that you agree, and the trade will be automatically closed at that moment's result. To cancel an order that hasn't been executed. For example, if you placed a limit order and the price didn't reach it, you can go to the orders section. Here you'll see a list of your active orders. You can cancel them using the cross buttons or go to the asset where the order was placed. The target price will be marked with a dashed line, and you'll also have a quick exit or order cancellation option. So, in terms of cancelling already placed positions or orders on Bybit, everything is convenient. This can be done through the main menu or directly on the charts where your positions were set. Now you've got the complete foundation: how to register, fund your account, open a trade, and work with orders, leverage, margin, and stop levels. This is the essential base that helps people reach results they once only dreamed about. But the most important thing isn't the information itself, it's what you do after watching this video. The market is moving right now, and only those who act understand that the perfect moment may not come twice. So take action immediately, follow the link in the description, create your account, top up your balance in a convenient way, and try opening your first trade, even with the minimum volume. You'll be surprised how much easier everything becomes once you take the first step. If this video was useful to you, give it a like and subscribe. Now it's time to move. You're already in that top 1% of people who don't just watch, they actually start doing.